And we're getting some signs from key economic indicators. NewsNation's Alicia Nieves is here with more on the state of the U.S. economy. I know you were at the New York Stock Exchange all week long. Let's start with the U.S. dollar. Is it taking a hit?
It is. So this is the U.S. dollar index. This matches the U.S. dollars, compares it to about 6 other currencies. Right now, we saw it drop to its lowest level in about 3 years. This is really concerning. You have it down 8% now for the full year so far. And this is concerning because analysts are scratching their heads, really trying to understand the last time we saw something like this. It's been more than a half a century. The dollar is considered a safe asset. When people pull out of risky assets like the stock market, they go into cash, they go into bonds. And so we saw that not happening. And this is something that has, a lot of analysts, a lot of investors concerned, because it means our investors here domestically and abroad pulling out of the U.S. more broadly amid the growing tension and concern and uncertainty with the Trump administration and these tariffs. And right now, that seems like this is an indicator of that.
I want to ask you about bond markets as yields increase. Typically, the average American isn't talking about bond markets in their everyday conversation. That's changing. Why, Alicia?
So we started paying attention to the bond market on Wednesday. We saw a spike in the bond market yields. Typically up means good, but when it comes to bonds, when yields go up, the actual value of the bond goes down. Bonds, again, are another safe haven asset. If they're pulling out of the stock market, they should be going into the bond market. That is unusually not happening right now. And again, it continues to make investors worried that there's a loss of faith happening in U.S. asset classes more broadly here.
The latest consumer sentiment numbers are out, reaching its lowest level since 2022. What are these numbers telling you?
These numbers are really concerning in that, down 11% month over month, 3 straight months where we've seen consumer sentiment pull back, 30% year over year pullback in consumer sentiment. There's even a read in this consumer sentiment report that shows inflation. Consumers are expecting inflation to spike over 6% now based on the tariffs that are being put in place, even the ones that have been pulled back. What this means is consumers are probably going to stop spending. If you're worried that you might lose your job, that prices are going to go up, that the economy is in a bad position, you're going to try to hold your money as long as you can. That leads to a potential consumer spending pullback and a recession. You have the wisest minds on Wall Street have been saying that. Jamie Dimon, Bill Ackman, the billionaire hedge fund manager, even Larry Fink coming out and saying we might already be in a recession. Larry Fink, the head of BlackRock, the largest asset manager in the world, saying that because typically for a recession, that means 2 contracting or negative quarters of GDP. We could be in a recession and not even know it. Typically, we don't know it until about 6 months in. If there's a ray of sunshine, it comes from Jerome Powell, who's not often the cheeriest person. But he has said, listen, we have seen in the past consumer sentiment come down negative, but consumers still spending. So it's not a 100% shot that we're in a recession or that we could be leading into a recession, but all the red flag indicators are going up.
All right, great breakdown there. Thank you, Alicia Nieves. Thanks for watching. Go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.